Where I want to start is your thoughts on this deal, because the market is treating it, perhaps because of the cost of it, as a negative on the stock today. What do you think of it?
Well, yeah, I mean, the market's treating it as a bit of a Halloween hangover right now, more trick than treat. And I think, what it does for investors is confuses the story. This was a Permian Montney play. This is now a Permian Montney scoop stack play with a few other things. So it becomes a more complicated story, and I think investors are sort of assessing that now and deciding whether or not they want to retain exposure.
And of course, Encana was doing okay. It seems their free cash flow was also almost break even in the past year. So there must be more questions about why they're doing this right now.
Yeah, no, absolutely. I mean, Encana was doing great. They just had a great quarter from the existing operations. They beat consensus estimates. They're generating free cash flow, buying back shares. But there had been a nagging concern about inventory in the Permian and how much running room there is there. So, I mean, there was a bit of an expectation that maybe they do some bolt-on acquisitions in the Permian. Stepping out into these other plays, though, that was the surprise for the market, but it does deepen their inventory.
So does this acquisition signal changes for other North American oil producers?
No, I don't think so. I mean, I think, obviously the Permian remains the go-to play in North America for oil. The scoop stack has been a very strong play, but not as strong as the Permian. So in many ways, this could be dilutive or viewed as being dilutive to the overall quality of Encana's asset portfolio. I mean, we'll see in the fullness of time whether or not they can take their expertise in the Permian, in particular their cube well design, apply that in the scoop and stack, and make better returns than, say, Newfield was able to generate themselves.
So, Randy, when we look at that percentage decline today, which I believe is the single largest decline in the company's history on a daily basis, how much of that might be tied to the concern about debt on the balance sheet that this deal will bring?
Yeah, I mean, I don't think debt is a big issue. I think really the big issue here is really how it changes the story. Before, this was sort of a quarter-to-quarter execution story, and they've been delivering for the last couple of years. This now becomes something that's going to take a little more time to understand, a little more time to kind of work their way through. So this really becomes a story that could, in the fullness of time, say 12 to 24 months, outperform. But I think there's a lot of things for investors to digest over the next 6 to 12 months. And given kind of the overall sentiment towards the energy space, which still obviously is very, very soft, I think investors are going to look elsewhere.
And I guess, Randy, in terms of the story changing, this does create a diversified geography, but does that allow for synergies? I mean, is there kind of logic in owning these assets that are in such disparate places?
Well, I mean, Encana thinks there are. Obviously, they've developed a strong expertise, as I said, in the Permian with their cube well design program. They would like to apply that elsewhere. This provides them an opportunity to test it out in one of the other stronger plays in the United States. I mean, I think there are other assets that they've acquired here in the Uinta, in the Bakken. I think those are more mature assets, and I fully expect those to become disposition candidates over time. So this deal likely closes at the end of this year. Over the following 12 months, I would expect them to see the Uinta asset to go, the Bakken asset to go, and maybe even the Duvernay asset in Canada. So, I mean, they could claw back a fair bit of this acquisition through dispositions over the subsequent 12 months.